Today, we're going to be talking about mortgage terms, which basically means how long is it going to take you to pay off your mortgage. So, things that we'll be covering is, generally speaking, the maximum that you can take your mortgage term over, as well as some of the things that you might want to think about when deciding which mortgage term is right for you. But first of all, if you don't know who I am, my name's Josh Tomlinson. I am the Managing Director of My Mortgage Finder. We specialise in helping people with bad credit get mortgages. We have a team of over 30 people here, and we arrange around £100 million worth of bad credit mortgages every single year. Now, when it comes to mortgage terms themselves, the amount of time that you can take this over, it does vary quite significantly. But generally speaking, these are taken out over periods from 5 years to around 40 years. But there are some circumstances where the time you can take this out is even longer. Now, first of all, if you're taking out a capital and interest mortgage, which basically is a mortgage that's designed, as long as you keep up with your monthly repayments, that the mortgage balance will be paid in full at the end of the mortgage, meaning that you own that home outright without a mortgage at all. If you're taking the mortgage over a longer period of time, then generally speaking, your monthly mortgage payments are going to be lower. And that's because you're taking an amount of money and you're just paying it off over a longer period, which naturally just means that those monthly payments are going to be lower because you're stretching it over a longer period of time. Now, the other thing that you need to consider when doing this is if you are taking it over a longer period of time, then again, generally speaking, the monthly payments will be lower, but that will likely mean that the amount of interest that you will pay over the complete term of the mortgage will be more money. So they're the two main things to think about, and the relationship between the two factors of monthly repayment versus total amount of interest paid is that the longer the mortgage term, generally speaking, the lower the monthly repayments, but the higher the overall interest will normally be. So hopefully that example has given you a little bit more of an understanding about the relationship between the mortgage term, the total amount of interest that you're going to pay, and the monthly repayment of your potential mortgage. Now, there are some other things that could have an impact on your mortgage term, and one of the main things that could impact it is your age. So again, generally speaking here, the younger you are, then the higher and longer mortgage term that you're going to be able to get. And the older you are, generally speaking, the more restricted that you are going to be on how long you can take your mortgage over. And the reason for that is that most mortgage lenders will impose a maximum age on when you can take your mortgage up to, particularly if you are working and have an employed income or a self-employed income, or basically an income that is dictated by the work that you do and the age that you are. So for example, if you are working, most lenders will allow you to go up to the age of 70, and a smaller handful of lenders will allow you to go up to the age of 75, dependent on the type of occupation that you do. So for example, if you were maybe a teacher, they might allow you to go up to 75 because the mortgage lender might see that's a feasible occupation to be able to work to that age. But let's say you were a scaffolder, a mortgage lender is not going to allow you to take that mortgage term up to 75 because they're going to think, is it realistic that this person is going to be climbing up and down scaffolding all day at the age of 73? Clearly, that's highly unlikely. Now, age can also work the other way, and what I mean by this is you need to be at least 18 years old to take out any mortgage, but some mortgage lenders will actually require you to be 21, which is a little unusual, but it is the case. In fact, a lot of mortgage lenders will require you to be at least 21 to take out a mortgage. Obviously, if you are 21, then you're going to have really any limit of mortgage term that you could take out, because if you're taking out a 40-year mortgage term, then that's going to end at 61. But just remember, if you're 50 years old and you're working and you want to use that employed income and you want to take that over 40 years, that's going to mean that you're 90 when the mortgage ends. Most lenders aren't going to allow that to happen. They're going to either cut it off at 70 or 75 in most situations. Now, there are a few exceptions to this rule. Let's say, for example, you're receiving pension income or benefit income. That's not directly related to your employment. So a lender might be inclined to allow you to take this over a longer period and really up to an older age. So we previously mentioned maybe 70 years old to 75 years old if you're working. Some lenders might allow 80, 85, as long as your income is not reliant on your ability to work. So another thing that it could impact the mortgage term could be the lender that we go with. So for example, we at My Mortgage Finder, we work with over 110 lenders, and every single different lender will have a different maximum mortgage term. So for example, there are a lender, Vida Home Loans. They will actually allow you to take a 45-year mortgage term now, which is actually considered a very long mortgage term. Most lenders will allow you to take a maximum of 35 years. And then there are a handful of lenders, maybe even a few more than that, that will allow 40 years. So just remember, the lender that you're going with, they will have a maximum mortgage term, and it's really at their discretion, whatever they decide that to be. Okay, so the next thing that could potentially impact the mortgage term as well would be what we would call affordability. And what I mean by this is the amount that the mortgage lender is prepared to lend to you. Now, this can actually work in the other way. And like we discussed earlier, the longer that we take the mortgage over, generally speaking, on a capital and interest mortgage, the lower your monthly repayments will be. And the lower your monthly repayments will be, again, generally speaking, it's easier to afford because you're just paying less every single month. So that lower monthly repayment may benefit the affordability on your case. So actually, by taking the mortgage over a longer period of time, can actually have the impact of allowing you to borrow more money. It's not the situation in absolutely every single case, but it is in some. The longer we take the mortgage over might actually allow you to borrow a bit more money than if we took it over a shorter period of time. And then this could directly impact the term that you could take the mortgage over, because let's say that you decided that you wanted to take the mortgage over 10 years, but the lender didn't deem that affordable. They might say, we're not prepared to lend it over 10 because we just don't think you could afford the monthly repayments, but we might allow you to take this over 15 or 20 years because it's going to make that monthly repayment lower. And the final thing that I'm going to comment on that can have an impact on the mortgage term is the actual type of mortgage that you take out. So, for example, buy-to-let mortgages, because the affordability is based upon the income that the property generates, not your personal income. Sometimes it's easier to take that over a longer period of time. There are also types of mortgages out there designed for retired people. Sometimes these are known as retirement interest only mortgages, and these again can be taken potentially over longer periods. And there are, of course, lifetime mortgages, which is a type of equity release. These are actually types of mortgages that don't necessarily have a term associated to them and can really be taken over an open-ended period of time. So the type of mortgage that you decide to take out can obviously have a direct impact on the term that is available to you. If you don't know which type of mortgage is suitable for you, obviously I would just recommend that you speak to a mortgage advisor and get the right advice. And the final thing that I will comment on regarding mortgage terms, regarding monthly repayments and the total interest that you're going to pay and the different types of considerations that you might have is often people think that mortgages and mortgage terms are only available in increments of 5. So we always hear people requesting 20-year mortgage terms or 25-year mortgage terms or 30-year mortgage terms or 35-year mortgage terms. You get the point, but there's nothing to stop you from taking out a 33-year mortgage term or a 24-year mortgage term or a 17-year mortgage term. So it doesn't have to be done in increments and multiples of 5. It's really just about finding the most suitable monthly repayment for you, which normally comes down to the maximum that you can afford without overstretching yourself. That means you're going to pay it off a little bit quicker and, hopefully, and you should pay less interest. But once again, if you don't know what to do, I would just absolutely make sure that you speak to a mortgage advisor and they will give you the right advice. So thanks for watching. As always, if you do have any questions, you feel free to pop those in the comments below. Alternatively, you can send us an email and the email is in the description. And please make sure that you hit the subscribe button and turn on the notifications for more tips on bad credit and all things bad credit mortgage related. And we will see you in the next video.